Yeah, and you mentioned it at the top of the show, this idea that Bitcoin is pristine collateral. And, you don't have to convince anyone on this call. We understand that Bitcoin's inherent scarcity, global demand, and 24/7 liquidity make it that pristine collateral. And so I guess my question is, should we expect that Bitcoin and Bitcoiners will eventually have the lowest borrowing rates, the lowest interest rates and cost of capital in the world?
Oh, absolutely. And it's been amazing to watch how Bitcoin has progressed and evolved over time. Because when I first started, Bitcoin was digital gold, and there really was no decentralized finance marketplace. So it was just a digital gold. It was the best store of value that you could possibly own. But what we saw was that some people think they compete with Bitcoin. See, I'm a Bitcoin maxi because Bitcoin is money and nothing else can compete with it. And if anything's trying to compete with Bitcoin, it's a scam. But that doesn't mean there's other centralized and decentralized ecosystems that are going to be built around Bitcoin in order to empower the holders of Bitcoin. And that's what we see now. Bitcoin has evolved from digital gold to the reserve asset of the internet economy, this decentralized finance economy, where, by the way, you get free market interest rates. Don't let the value of free market interest rates, when you look at price controls, they've never worked, right? When Kamala came out and said we're going to do price controls, she got a lot of backlash on that, and rightfully so. But what's interesting to me is that she got backlash on that, but where's the backlash to the central authorities that are naming the price of money, which is interest rates, because that's a price control too. So we have a price controlled financial market right now where the price of money is based on a stated anchor rate. Well, in the internet economy and decentralized finance, where Bitcoin is the pristine form of collateral, we have a free market interest rate discovered by the supply of money, the demand for loans, and the perceived counterparty risk. This is how the price of money should be determined. And free market money is always more profitable than socialist money, than communist money, than price controls. And that's why the biggest market makers in the world, including BlackRock, are tokenizing treasuries, because they want access. They want liquid access to these decentralized markets with free market interest rates, which generate significantly more profit than the fixed stated rates that we see in the traditional economy. And that all of DeFi, all of these free market interest rates, they would not exist today if Bitcoin weren't the most pristine form of collateral in the world. And what's amazing is when you think this through and you say, okay, now I can go to a banker and I can show him, yeah, I make $200,000 a year, and I've been making it for the last 6 years, and I have a good credit score, and I promise you, if you let me borrow $2 million, that in 30 years I will pay you back. I promise. And he goes, okay, no problem. I'll let you borrow at 6%. And you're like, oh, that's not bad. Now you go to a Bitcoin lender and you say, hey, I want to borrow $2 million, and I'm going to put $3 million of Bitcoin as collateral. I'd like to borrow against that equity value. What can I borrow at? Oh, so you're putting $3 million of collateral. There's no promise involved whatsoever, because if you walk away, if you default on the loan, I don't have to foreclose on you. I don't have to chase you down. I just sell your collateral to recover my principal plus any penalties, and you can come back and get what's left over. You know what? Okay, 16%. 16%? What are you talking about? So I can go to this guy and make a promise and borrow for 6%. And then I can come over here and have an over collateralized loan, and you're forcing me to borrow at 16%. So the marketplace needs to mature. The marketplace needs to, I guess not the marketplace, the market makers themselves. And that's why we call People's Reserve. We're a market maker for we the people. We are here to make the market, acknowledging that Bitcoin is the reserve asset of the internet economy and the most pristine form of collateral in the world. And when you're going to post $3 million of Bitcoin collateral in order to borrow $2 million, you have significantly reduced our risk. And because you have significantly reduced our risk, that's part of how interest rates are priced. It's not just the supply of money and the demand for loans, it's also the amount of counterparty risk. Well, you have eliminated that risk. Therefore, we can lower your interest rate. So the natural laws of interest rate price dynamics tell us that, yes, as the marketplace matures, Bitcoiners and Bitcoin governments are going to be considered the risk-free borrowers in the marketplace. And those who don't have Bitcoin on their balance sheet, they're the ones who are operating on promises versus secured lending models. And they're the ones who are going to have to pay the higher rates because there's simply more risk.
So what do we have to do to see this maturity in the marketplace and then see these low borrowing rates? And what are the implications of Bitcoiners having access to the cheapest capital in the world? I imagine there'd be greater demand for the asset, but also a lot less selling because you could just borrow against it if you need liquidity.
Yeah, yeah, absolutely. And that's that's the amazing thing at People's Reserve with our Bitcoin bond. The way that a stablecoin bill is structured is that you need cash or cash equivalent backing a stablecoin. So when you own a Bitcoin bond, you literally own cash equivalents. So when you post cash equivalents as collateral, you can borrow against them at a very low rate. It's like the federal funds rate. It's like an interbank rate because you're providing the asset that produces the circulating liability in the stablecoin. So the dynamic that's getting set up here is, why would I be an insurance company who has to partner with a bank who has to then partner with another bank who has a Fed master account and then pay a premium on top of each one of these middlemen when I can just hold the actual collateralized asset myself and then post it with one counterparty like People's Reserve and borrow against it to access that equity and to do it in the cheapest way possible. So what we're really asking here is, what do the economic incentives tell us? And the economic incentives tell us that people are going to gravitate towards a lower cost of capital. And as they gravitate towards that lower cost of capital, this is why we call them the cantillionaires, right? They don't want the system to change because they have access to free money. Not everybody has access to free money. They do. They benefit from the most. They're the ones who get it first and get to spend it with the most purchasing power. And then it trickles down to the rest of us. Well, it doesn't work that way in a Bitcoin economy. In a Bitcoin economy, you can't create free money. You can't create money off of promise. It's a commodity credit market, and it's an over collateralized lending contract, which means that if you're going to be like Sam Bankman-Fried and you're going to create paper Bitcoin, it might work for a little bit. But when the chicken comes home to roost, there's nothing you can do. There's no such thing as being too big to fail. You can't create more than the 21 million Bitcoin that are available in the marketplace. And if you don't have the money to buy them to settle your debt, you're going to fail. So a lot of people get scared about that. They get scared. Oh my gosh, with a Bitcoin credit market, there can be failure. But failure is what we need today. Failure is what the fiat system is not allowing to take place. When you have a credit cycle, part of that credit cycle is the destructive part of that cycle. The over collateralized and the mismanaged must be punished. They must be destroyed. And if they're not, then you end up in an economy like we have today, where most companies in the stock market are zombie companies. I mean, these companies are not worth investing in at all. They're zombies. It's scary, actually, the amount of debt that has been taken on within the economy and the ability of these companies to use their cash flows to barely service that debt. But there's been no destructive process. Everything is too big to fail. If we close the word down, no problem. We'll just print money and send it out to you. We're beyond the helicopter money phase, right? The helicopter, once you get to helicopter money, once the government prints money and just sends it to you, I don't care what the reason is, you have now entered the last phase of that currency's life cycle. And because of that, we have been at the highest risk of going from inflation to hyperinflation, because I don't believe there's a mathematical definition like they say in the economic textbooks of 50% month over month equals hyperinflation. No, inflation is hyperinflation when trust is lost, because it's the loss of trust that transitions the economy, the society, whether you go back to Rome or Weimar, it doesn't matter. Hyperinflation didn't take place at a certain mathematical point. It took place when people lost trust in the currency. So by starting the strategic Bitcoin reserve, by starting the Bitcoin recapitalization fund, by innovating with new fintech products like a Bitcoin bond, we are actually rebuilding trust. And we can enter into a world where perhaps the dollar dominance can actually increase rather than decrease, because we've properly applied a Bitcoin strategy to our economy and to our fiscal and monetary policies. It's amazing to see. It's so exciting, because ever since I've been paying attention, it's the first time I've had hope. I've not had hope until this time. I believe Bitcoin is hope. And we are seeing that when markets are hopeful, there's going to be things that can't even be described that happen, because the amount of investing, the amount, the saying goes like this, right? You don't change Bitcoin, Bitcoin changes you. So as Bitcoin changes people, it's going to change society, it's going to change culture, and it's going to change it in a way that makes it better and stronger, which includes a little bit of destruction, because in that destruction, you get rid of the mismanagement and the over leveraged, and you start at a stronger point, so the economy can start to build from a stronger foundation. And sometimes we'll get ahead of ourselves, but we come back down. And you notice what happens with Bitcoin? Bitcoin gets ahead of itself, it comes back down. But the definition of store of value is that it comes back down to a higher low. So it's fun to talk about the peaks, but the technology is about creating higher lows and increasing purchasing power over time. And a Bitcoin economy is going to be the same thing. Yes, we're going to get ahead of ourselves. Yes, we're going to have drops, but the foundation that we settle at is going to be a higher low than the previous foundation. Right now, in fiat, we just keep going up. We have not revisited that foundation. The problems keep getting worse and worse and worse. And with Bitcoin integration, we can kind of solve these problems before the consequences of those bad decisions take place.